Great question. So the question is, when do entrepreneurs first work with a company like Deloitte? And you also mentioned that I said 65 to 70% of our revenue is from consulting or consultative services. The balance is from audit-related, like tax and audit, stuff like that. So we have 200 companies that are portfolio companies of venture capital firms. We're pretty selective in the firms we follow, so we like to follow smart money. So we first pick the venture capitalists we want to be affiliated with, and then we target their portfolio companies. So we have 200 of those, and they're in every stage. And it's funny, you wouldn't think this, but one of our clients right now is at the printers preparing their S1 for their public offering, and they're actually going to enter this market and try and do an IPO. So, cross your fingers. It's OpenTable. You guys know OpenTable.com. So they're actually going to try and weather this market. So every stage, from very early startup, when they first feel like they need some financial statements that are certified, to a pre-public company in the latest stage possible, like an OpenTable. Now, there's a lot of churn in that portfolio right now that you might imagine, right? So some of our clients are they're shutting their doors, or they're cutting back their funding, so they're cutting back their costs. And so some of the companies are saying, well, maybe we can do an audit every other year and then do 2 years at a time to save some money. We make a big investment in those portfolio companies. We do those audits for very, very low fees. We lose money on those audits for not the entire time that they're pre-public, but it depends how long, right? So if the length of time to get into the public markets continues to extend, we lose money almost that entire time. And then we make our money when the company goes public, and then it becomes a public company. And public companies have, they just have greater needs, and their fees are higher. So that's our strategy. And it's another question around, do you weather through the down economy with a portfolio like that? And that's another thing we're not wavering from, because we know that the market's going to turn. And we want to be there when the market turns with that portfolio of companies that will hit the public markets at some point. We just don't know when. So client acquisition is basically through VC relationships, you guys have? Yeah, it's really through the whole ecosystem, right? So we get leads from the VCs themselves that we have relationships with. We get leads from law firms. We get leads from bankers. So Silicon Valley Bank is a really great market partner for us. And it comes from all over. And then we do the same thing, right? We cross-refer each other all over the place.
So there's this cross-referral in the Valley. Is there cross-referral within the firm? So you have all these different practices that do different things. Does a client move from one group to the next group as their needs change?
Yeah, they sure do. We have debates all the time in our firm around, should the client be an audit client or should they be a consulting client? Because in the regulatory environment we're in now, you can't really do both. So yes, sometimes an audit client will become a consulting client, or a consulting client will become an audit client. And that's a kind of a business decision that we sit down with the client and talk about in terms of what it is that they need at the time. Another way we cross-collaborate is across borders. So we have some interesting things going on right now with China. There are some Chinese solar companies in particular that are setting up operations in the Bay Area. And so they're audit clients of our China firm. And so they're referring work to us as their clients move into the Bay Area and set up operations here. So it works across borders too.